What's up guys, Trail here, better known as Budget Bill, and today the topic I want to discuss is for the people that are wanting to buy a home. Or if you know someone else that's in the process of buying a home, this video might be for you or them or anyone else that you know that could benefit from this video. Now today we are going to discuss 3 ways to avoid mortgage insurance, also known as PMI. Whether it's your first, second, or third home, it doesn't matter. Being able to avoid paying PMI is a benefit and a great way to save money on your monthly mortgage note. And also don't forget one of my previous videos that became a big hit on this channel where I was showing you why you should not escrow your mortgage. So be sure to check that video out, but after this video, link in the description. So without further ado, let's go ahead and jump right into the video. What's up folks, and thanks for sticking around. So if it's your first time to this channel, welcome. We are glad to have you. My name is Budget Bill and I create videos to share knowledge and information that could help you save money. I do this for free and all I ask of you in return is a quick click of the like button, as it definitely helps out the growth of this channel. So let's start off with what is PMI. Private mortgage insurance, also known as PMI, is a type of mortgage insurance that buyers are required to pay for if you have a conventional loan. PMI is usually required when you have a conventional loan and you make a down payment of less than 20% of the home's purchase price. But why is PMI even required? I'm glad you asked. PMI is required because the mortgage lenders need more confidence in the buyer to repay the loan. So they must protect themselves in the event that you are unable to cover your mortgage and ultimately default on the loan. So this has been required as a way to lower their lending risk. So as a rule, most finance programs charge mortgage insurance as an additional fee to offset the risk they are taking on by loaning you the money to pay for your home. But as a side note, please note that the PMI fee does drop off after a few years of paying for it or when your home finance portion drops below 80% of the home's purchase price. So obviously the first way and most common way is to put down a payment of 20% or more on your home's purchase. Now, majority of the time, most people don't have 20% to put down. Let's face it, that's a lot of money depending on the house price. So for example, the average home price here in Texas is around $200,000. And with that, a 20% down payment comes to about $40,000. That's crazy, right? And just think, some of those people out there that are living in the suburbs in those fancy homes pay anywhere between $300,000 to $500,000 for their home. And that comes to about $100,000 in a down payment just to avoid PMI. So it's really something that most people are unable to do, so they agree to pay PMI insurance in order to buy their home. It's easier to pay a monthly fee for PMI than it is to pay one lump sum up front. It's kind of hard letting that large amount of money leave out your bank account just to buy a home, just to move in. And also from an investing standpoint, you could potentially invest that $40,000 into something else that could pay off the PMI fee and generate some additional passive income. But that's a topic for another video. Now, the next way to avoid PMI is the option of a lender paid mortgage insurance, or LMPI. This is common as majority of buyers' main focus is to just buy a home, not to save money in the process. I know before the housing bubble happened, potential buyers went in to buy a home and their only question was, how much is my monthly payment going to be? They didn't care about anything else. And in doing so, most people had the LMPI attached to their loan without even knowing it. They also had variable rates that lasted for 2 to 5 years, and then your mortgage would skyrocket into something most buyers couldn't afford to pay any longer, which in turn provided an economy of home buyers unable to afford their homes and ultimately had to foreclose on their property. So as a key reminder, make sure you understand everything on the loan estimate from the finance company so you are not left in the dark on empty promises you can't handle. Sorry, I went down a little rabbit hole there. But yes, LMPI is where the cost of PMI is included in the mortgage interest rate for the life of the loan, not just for a few years. That could be very costly for you if you choose this option, which I would never recommend anyone go this route. This option will cause you to end up paying way more money in interest over the life of the loan. I don't recommend it, but it is an option. And then we have our third way, which is my favorite option, which is to split the mortgage up into 2 mortgage loans.
Is that even a thing, Budget Bill?
Yes, it is. Yes, it is. It sounds weird, but let me explain. So every primary home purchase I have made, I typically do what's called an 80-15-5 loan. What that means is I would split my loan up into 2 loans. One loan worth 80% of the home's purchase price, the second loan worth 15% of the home's purchase price, and then I pay a down payment of 5% on the home's purchase price. And with all of that, you have a total of 100% of the home's price covered. Now remember, PMI is required by mortgage companies if you finance more than 80% of the loan. So this way, I am only financing 80% on the first loan or mortgage company, and then I finance the other 15% with another mortgage company. So therefore, I meet the requirements of not financing more than 80% with one mortgage company. I know that might sound a little tricky to the brain, but trust me, I've done it on both of my primary home purchases. So rewind it to this point right here so you can listen again and grasp this concept. We want you to save money on PMI fees. But if you've grasped the concept, then great. Hey, moving right along. So for my home, I originally had to pay 2 mortgages to 2 different companies. But with technology, online payments, and auto payments, this process is super simple to set up. I ended up setting up my primary bank to send payments to both mortgage companies every month, and now I don't have to worry about it. Then as time progresses, the value of the home should increase, and you would have paid down both mortgages. Then you could potentially finance both loans into one loan as long as it's not more than 80% of the value of the home. I usually advise all of my colleagues and friends to research this option so they can too avoid PMI fees that basically have no value to the buyer. It is only a value to the mortgage company as they make more money off of your loan. Now, I'm not saying that they don't actually buy additional insurance coverage, but who knows, right? All I know is they charge you a fee of $100 to $250 per month for PMI insurance coverage. That's almost an additional $3,000 per year of fees that don't go towards your mortgage loan. I call it wasted money, and Budget Bill doesn't like to waste money, especially when there's a loophole. I mean another option to avoid wasted money. So if you or someone you know is in the process of buying a home, be sure to research this option online as well as with your finance company you are using. Now beware, not all companies offer this option and none of them will actually offer it to you on their own. You have to actually ask them about it. And if your current mortgage company doesn't offer it or have that available, then you should actually shop around for another company. Or use a loan officer broker that shops around for the best deals and uses several mortgage companies to choose from. They also have other alternatives such as 80-10-10, which operates the same as my 80-15-5 loan. So check it out. If you have any questions whatsoever about this option to avoid PMI, be sure to ask them down in the comments section. I try to respond to each and every comment. If you enjoyed the content in this video and think it could be valuable for someone else, we ask that you share it with at least 2 people and give this video a like, as it definitely helps out the growth of this channel. Also, if you haven't subscribed to this channel yet, what are you waiting for?
He ain't getting any younger.
Shut up, fool. This is a great time to click on the subscribe button and the bell next to it so you can be notified every time I upload new content. We would appreciate it. Other than that, hey, I appreciate you guys watching and I will see you on the next video. Peace.